Welcome all. This video is just only for educational purpose, and this is a strategy which will yield better results with limited cash. With like 20,000, we can create this strategy, and if the market goes positive for strategy, we will definitely make good returns. Okay, so please backtest and before taking the trade, and let's review the weekly high and low for Nifty. This week, Nifty has touched the high of 9,584, and it even touched the low of 9,043, and it closed at 9,135 36, and so this is the support and resistance for next week. So the pivot point, the midpoint is at 9,255, and resistance at 4,066, and support is at 8,925. So based on this, we're going to see what is the best uh, price we can choose in Nifty. Okay, in NSE website, we're going to check contract for the week. The expiry date is May 21st. Okay, so I'm going to show you what are the strike price I have chosen for straddle and strangle. Okay, straddle is just buying both call and put at the same strike price and same expiry, and so that if market moves either way, it goes down or goes up, we will make in profit in either of the um, options, either call or put. Okay, so I have chosen 9,150, and obviously it's because the market is closed at around 9,050. So that's the reason I have chosen 9,150. Okay, so this has to be bought by Friday end of the day, when market closing, before market closing, uh, around 325 to 330 we can go for the buy, and we have to do this analysis by around 350, so that we can start buying the correct strike price. Okay, so Straddle, we have chosen 9,150, and both call and put, the expiry is 21st May. Okay, what about strangle? Strangle, as you know, the support is at 8,025. I'm sorry, 8,925. So I have chosen the put option at 8,900, and similarly, the resistance was at 9,466, and the midpoint, the pivot point was at 9,250. So as the market is no below the pivot point, the midpoint, I have chosen 9,350, and just a calculation, and both call and put, if it's in the same price, it will be much better. Okay, another thing is market is at 9,150, and if you look at the current week's market movement, making a big move from 9,150 to 9,500, 600 is not going to happen. So that's the reason I've chosen the strike price to 9,350. Okay. Um, okay. So this is the weekly position we have taken. We have to evaluate our results by Thursday, end of the day. Let's review, and I want everyone to um, take this as an education, and create your own strategy. And the reason why we choose this particular strategy in call and put uh, in options is because the losses are minimum, comparing to going for a naked trade, either in call or put. Okay, you will lose the entire money, or you will make good profit. Okay, here the risk is limited, as well as the profit is limited. Okay, but still there is a high risk. If example, if you go for long, if if the market didn't move much, and till Thursday, and market just closes at 9,150, obviously you will lose both the money. And similarly, strangle, there is no much movement. The premium goes down. Obviously, will end up losing money. But the probability of in the market is a little high in this strategy. That's why I prefer and advise and suggest this particular strategy. I want everyone to know in the stock market to know who have limited cash. Okay, people who don't have lakhs and lakhs and crores, and go for this strategy. Okay, weekly, deploying 20,000 for the strategy will yield a very good result for you. So, okay, keep a good stop loss. Okay, which is affordable for you, and trade better. Okay, thank you so much. Please do subscribe our channel, and we'll be keeping posting educational videos like this with very good examples. Okay, thank you so much, and have a wonderful day. Thank you. Bye bye.